All right, it's 4:30, and do you know where your money's at? That used to be in line. Anyway, hello, welcome everyone. I just want to make sure we can hear, see everything. It's a PUG users group. It's St. Patrick's Day, and in the live trading room, I did play an older version of When Irish Eyes Are Smiling. We won't do that now. We don't have enough time. But just to make sure, can everyone hear and can everyone see? John, thank you very much. And George, thank you as well. I don't know where to start. I've got, a stack of questions, a stack. Boy, this market is just inundated. I told my wife, I said, I just need a me moment. It's like you cannot do anything without the market moving 100 or 200 S&P points. And, today we had a nice setup for the day for a trade. Many of you were in the room. Hopefully you took that. And at the midpoint of the session in the afternoon, I said, I don't trust this market. There's just not enough that we're seeing stabilization. And that's one thing we have to do. What does stabilization mean? We have to stop seeing 200 or 2,000 point swings in the Dow Jones Industrial Average. Just let's put it in other terms rather than in S&P points. For those that aren't an active day trader, we'll just put it in Dow terms. We have to see stabilization, and right now we have to start seeing the market stop making significant progressions of lower lows, and we've seen that right now as of today. We didn't really close great. We didn't close bad, but we stopped the insanity of massive destruction. Now, is this a bottom? At this point in time, I'm not there to say, is this a bottom? But I will say at the end of the day, and that's what we're here for, the PUG group, I will say, first and foremost, before we really begin, thank you for joining me. Happy St. Patrick's Day. We've got green on the screen. We had a green trading day today. Let's just say that I'm not sure if the Chicago River got dyed green out of tradition, but we do know that the parades have been, what's the word I'm looking for? Stopped, halted, canceled. That's the one, canceled. It's a cancel replace on St. Patrick's Day, but you really can't replace St. Patrick's Day, can you? All right, but you can cancel it. So that's what we've done. All in in the spirit of, again, safety and humanity, and that we don't pass this COVID-19 around. So take a moment. Trading is risky. Everything that you hear and see here is for educational purposes, and then now we should move on. If you're not a member of our VIP club, you should be. The annual membership's $11.29, literally a bargain and a half because of our proprietary volume indicator, the PMC indicator, which is on other platforms now as well, but the JP Trilogy scan, we're going to show that in a second. We have our LCC, our HCDs on the radar screen. We have, again, the breadth indicator, which there was some confusion on our last meeting. It's not brand new. It's a McClellan oscillator, but we converted it to adapt to the breadth analysis of the individual respectful, geez, tough for me to say, individual stock indices. The New York Stock Exchange, a lot of day traders used to teach, and still do to this day, of using the tick and possibly the trend to make overbought, oversold decisions. I think logically that worked in the old days when there was nothing better to go off of. And in a hyper sensitive and very, think of this, a very unique, scientific, surgical, lasered, targeted sector specific sensitive stock index market. The NYSE is not the broad-based market it once used to be. We need to break down the effects of what the Qs versus the Dow, one stock, Boeing, the effect it has on the Dow versus the myriad of sectors, the NASDAQ 100, between biotech, retail, with Costco and Starbucks. The Qs have a different construction. The S&Ps, with its weightings from financials, energy, and even slight weighting with utilities, different makeup than, again, the NYSE. So why in the hell am I using information that's built off of the NYSE index to trade S&Ps? That makes no sense. So with that said, that's the why we converted with the McClellan oscillator to get a specific reading and broke it down. So there's a lot of great things that we offer through our PUG membership and the TradeStation platform. I will take this time because that's what the PUG user group is about, the TradeStation platform, not Thinkorswim. But if you're a Thinkorswim user only, please don't feel offended. You may pick up and learn things in this presentation today. This is a half-hour meeting. We answer questions, and I'm going to get into that right now. A public service announcement. There's a software called HGSI. We've added our indicators there. We haven't had a exact bona fide launch introduction to it for you guys. Not yet. We're working on that. Right now, we're working on other things such as trading. So we need to trade while the market's giving it. And so with that said, let me start off with the first question. Hey, hi, John. Jude, I'm throwing your name under the bus. I'm going to throw everyone under the bus that wrote me an email. Good, bad, or indifferent. I always invite constructive criticism. So I don't want to cherry pick. I'm going with all of them. I won't give out your last name for anonymity reasons. But anyway, first, hi, John. First, I want to say a big thank you. Developing Algo 17 trading system, it really levels the playing field for retail day traders like myself. You're probably one of them. I'm going to read this because this obviously is a pat on the back after a month and year we've had. You are probably one of the best TA gurus, and I don't consider myself a guru, but okay. I had a privilege to learn TA skills from. As for my algo trading and bottom line, I must thank you. It has improved significantly thanks to online mentoring and Algo Room. I have questions on using the algo on trading ES 5-minute, crude oil 5-minute, GC 5-minute, and pound 5-minute. In a high ATR and volatility market like today, and it looks like this was written today. Okay. Hey, does using the TSI indicator on different time frames help in your trade entry and exit better? Answer would be, what is TSI first and foremost? The TSI is an indicator we created to help identify a market moving in sync with 2 time frames. So let's take a look at the ES right now. And if you see the 15-minute in a buy mode this morning, and we'll take a look at cherry pick, say the 10 o'clock, and we take a look at the 15-minute. So the answer is, if you're in a 60-minute time frame buy signal, right? And here's the 60-minute time frame. So if you set your 5-minute to be in sync with a 15-minute, probably not going to get as, I mean, that's a good one, but in a high ATR environment today, or any day for that matter, you know, the higher time frames like dailies and weeklies and even monthly, right? Those time frames, if you're trying to day trade, I would suggest in this environment on a high ATR, and define a high ATR. High ATR in normal historic, well, first off, what is ATR? Average true range. How do we define average true range? Average true range is defined by the amount the market moves from the prior day's close to the high, or the prior day's close to the low, or the high-low of the range, the greater of the two. So Wells Wilder created the ATR, and it can be calculated in his style, which was using 14 period, half a month, or half a moon cycle, as he called it, or we can convert it to 5 and 10-day periods. I prefer a 10-day period. Now, let me go over and change my format here from, well, actually, I'm going to leave the 15-minute. And you'll see on the ES, the ATR, and if I go up here and look at our radar screen, so this is a 20 period. All right, so I'm going to change this to 10 just to put things in perspective for us. Today was probably one of the narrow, it was a very narrow trading, it was a narrow trading range compared to the last 3 days. It was about half. But what this is it takes the average of 15-minute bars, all 15. It adds up 10 15-minute periods, and averages it out. Average true range of a 10 period. 38.5 points in 15 minutes. So that means on average, over the last 10 prior bars, the average range in 15-minute bars is 38.5 points. Okay, we had in December in the stock market, by the way, just to remind everyone, a 17, the week of Christmas, a 17 handle 10-day ATR in Christmas time this year. 17 handles on a 10-day average. This is 38 points in 15 minutes. So I think we can say this is historically a high ATR environment. So I think new traders need to understand, and you can simply do it by looking at a chart. If you're telling me, is this normal? If you're not looking at a chart, then I don't want to insult you and make funny jokes and insult someone's intelligence, but you're not paying attention, man, because you can go back through history and look at the average ranges and look at, wow, that was a big sell-off that we had over here in December of 2018. Baby, it ain't nothing like this stuff, okay? The daily ranges are unbelievable. So please understand, I don't care what indicator you're using. You got to make sure you understand, and that's my job to help teach you. This ain't normal, all right? There's a tool you can use, and you can create your own ATR trend or at least graph to understand what the condition of the market is. And, throughout history, by the way, just to point things out to you in perspective, this is the most historic ATR and again, this is a daily chart on the ES, and this is a 10-day ATR, just to put things in perspective. And we'll go back through time so that you can see factual information, okay? Factual information, not fake news, but factual news. We had an ATR here, which was historic in December of 2018, historic, as you could see, the 10-day ATR rose to about 90 and change. 90 S&P points on a 10-day ATR. Fast forward to December of 2019, and we had we went from one extreme to the other, and we were trading at around 17, as I just stated. And now, drum roll please, where are we? Well, we surpassed that 90 number by almost more than 2.5 times. We are at a 213 level right now, 218.97, excuse me, to be exact. That means we have a 10-day average true range in the S&Ps of 218 points. So I ask you, and you say, John, you've been around and you've done this for 40 years. How often have you traded in a 218 10-day average true range in the S&Ps? And the answer is never. None of us have. It's historic. Good luck. And I mean that in a very simple negative way. It's just reality. Good luck meaning if you can't figure out that this is insane, I don't know what to tell you. So grab your bootstraps and settle down and put your seatbelt on, because this is absolutely crazy. And to navigate through this, and I don't want to downplay it, COVID-19 is a horrendous virus, but at the end of the day, the death rate, it's not like the Spanish flu. The question begs, did the market, has civilization overreacted? Well, let me put it to you this way. The market is a reflection of human nature. So has human nature overreacted? Only if you have it and you're on your deathbed in a hospital, then you're not overreacting. So it depends on whoever's perspective. I hope you found, that's a factual statement, and it's the cold truth. This is something nobody wants and nobody wishes anyone to have. It is a severe flu. It's not a good one if you get it, and I don't wish this on anyone. So the question is, we've never gone through self-quarantining on a global scale, whether it's from Tel Aviv to Frankfurt, Germany, to Milan, it doesn't matter. Global shutdown of social distancing, and schools and everything ceases to exist. It's like Christmas vacation for an extended month, but with dire consequences. And that, my friends, is different. You can't really be truthfully trading in this market on an algo optimizer in any kind of settings that you've ever seen, because this is a total different environment. So the TSI indicator, friends, is an indicator that says if the short term is in a buy, is it in sync with a higher time frame? And the indicator, we allowed people to customize their own settings. So if you want to choose 1 minute to 15, and that's what you're going to have to do. So I don't think if you just look at the logic, and so I can't give you the answer, I can teach you what to look for. Because the answer today will not be applicable when the ATR goes back to 30 again, or 10. So the question begs, look at the market. Generally speaking, if the 15 minutes in a buy, I probably don't want to take 5-minute sells. I'll take 5-minute buys. Buy signals when the short term is in sync with the higher time frame. So let's look at that theory that I just said. If you have your TSI set at a 15 for your higher time frame and your 5 or 2 minute set for your lower time frame, let's take a gander here together, and I'm going to go look at this and say, all right, we generated a PPS buy signal on the 15 minute, and the 5 minute generated a buy signal at the same time, and the market launched to the upside. All right. So here's an example where the 5 minute generated a buy signal here, and the 15 was in a buy signal as well. And so again, you got a lot more fruit off the table, or off picking off that tree, with the short term in the higher time frame. In the meantime, look, the weekly is in a sell mode. So you're taking a buy signal short term against a weekly sell signal. I mean, it depends on your point of view. As a day trader, swing trader, if you want to take a sell signal on a daily, when the weekly's in a sell mode, you're going to get more fruit off the table for a swing trade. So in a high ATR environment for day trading, you better align your stock time frame, or your chosen chart time frames up correctly. And in a market like ES, listen, man, we're at a historic trading range. And I've been telling people in the room, the exchange raised. This is the only game in town that they changed the rules in the middle of the game. The margin requirements expanded, and the rate of change in the market. And this might be a little too rich for everyone's blood, where you see the market move 25 handles, not ticks. That's 100 ticks in less than 20 seconds. And it does it frequently during the day. So that makes it tough to kind of day trade in that environment. You don't know if your system goes down, the order was received, the lightning speed, maybe your internet's down by a second or two, and every second in this market counts, by the way. Next, I've always said that if the heat's too hot, get out of the kitchen, but don't get out of the house. Maybe go to a different area. Look at the ATRs in other markets. If we change and we go over to crude oil, and excuse me while I change this, I'm just going to go the at sign so that you can see the front contract in crude oil. Here we have the ATR, which currently is a $3 move in crude oil, $3 range in crude oil. So that's a 15-minute market. And if you take a look, well, we got to change this over. I want to go back over to a daily range, excuse me. So let's see where we have crude oil. Here we go, crude oil. All right. So here is a 10-day ATR, $3.67. Average true range is $5. The average true range. When was the last time any of us traded $5 ranges? But wait, this isn't crude oil trading $5 ranges and $150. It's pretty unique to be trading an ATR in this environment. But notional value, a 200 S&P point is $10,000. A $4 is half of that notional value. So crude oil is actually a little easier to trade right now than the S&Ps. the foreign currency. So you want to stick to, maybe switch over to different markets that are trading closer to its, or not as much of a historic movement. So you can manually override the TSI to change it to whatever you want. 1 minute to 15 minute, 1 minute to 60 minutes. Just think of the logic of what you're asking. This is not normal times. The normal ATR for a 5-year history is around 28 points, by the way. This is almost 9 times greater than the 5-year average of ATR trading ranges. Historic, okay? So I hope that clarified that answer for you and that question, all right? How do I trade the JP volume and McClellan oscillator indicator to time my algo trades? Well, when it comes to any trade in the market, the McClellan oscillator is for longer term daily analysis to see the strengths of if the market's overbought, oversold. And if we're at support and the market's very oversold, or we got decent buy signals on the McClellan oscillator, that's a different class all in itself. As far as the volume indicator, to help you with the volume indicator, the J-Person volume indicator, and if I may be so bold to go over here and I'll format this real quick. Many of you are familiar with the volume indicator in the sense that, and I'm going to change the symbol over here to the ES because many of you are already interested in the ES. All right, so the volume indicator gives us readings. For example, when price is generating a buy signal. So if you take a look at this buy signal right here, it's a high closed doji. I'd say, gee, do I want to take that high closed doji? What is the condition of the volume? When the market broke down, was the volume indicator momentum moving lower, or were the histogram bars making higher lows? And the answer is they're making higher lows. And the volume is starting to upturn, and yet we have seen where the market, the volume indicator, can give better readings of the momentum of the market. And then again, you get a little sell signal and you'd say, do I want to go short when the volume indicator is pointing up? And the answer is, how do we know it's pointing up? Because the purple line is up, the green line is up, and the histogram is still green. And then you finally get another little signal, and this was Friday at around right after, I think this was Friday right before the president started to speak, and we had a 15-minute high closed doji. And then the commitment of traders report came on. President Trump came in, and the VXX sold below that 44.55 number, which we posted in the trading room. And I said this could be for a good pop to the upside as a day trade. And it wasn't just a good pop for a day trade. It was an insane pop. It was about 100 S&P point move, like 150 S&P point move out of nowhere, 1,500 Dow point move, just to put things in perspective. Looking at the volume indicator, it helps me say, is the volume improving? Because in order for a good buy signal to have any momentum, there needs to be a force underneath that price. And the force is participation. Participation is represented by that volume and the momentum of that volume. When the price is going up or it's starting to pull back and the histograms are starting to weaken, it's showing that there's no support in that rally. LMO RFN, which stands for let me out right now. So I'm not giving a class today on the volume indicator as much as what is the usefulness of the volume indicator. The volume indicator is showing us money flows coming in and coming out. It shows us bullish convergences. It shows bearish divergences. It's just like a momentum indicator, and it's based on percent change of volume, which smooths out the erraticness of what's going on versus the on balance volume tool. So yes, I absolutely encourage everyone to use, and that's why this volume tool is in the algo room. Okay, so I hope that took care of those questions. Next, John R. Hi, John. My question: in these times of day, today, extreme volatility, do you change the way you use the commitment of traders report, or are the reports of not much value because of the time lag? No, John, I think we used the commitment of traders report to show last week, and I think it's important to see the consensus of the market. This Friday will be an unbelievable example of the market. Let's go in that. I like your question. Let's look. In fact, we do have the commitment of traders report in our package already created for everyone, and it's right here. So let's take a look at this number, and let me show you something that's very unique. And while we have to remember, when you look at the commitment of traders report, again, this comes with education. This is one of the largest. Now, I want you to look at this. And for this, I'm going to put up a drawing tool. So bear with me 1 second while I turn on the drawing tool function. Drawing tool function is on. All right. So there are 3 colors here. I want you to understand. Red are the commercials, blue is the hedge fund, and yellow is the small speculator, one lot traders. Now, it's not that they're as of Tuesday. Now, remember, when does this report come out? It comes out on a Friday at 3:30 in the afternoon, but the data is taken from that Tuesday. So your job is to find out, what did the market do from Tuesday to Friday? Now, here's the interesting aspect. When that report came out Friday at 3:30 in the afternoon, the market was down here and had a hellacious 1,500 Dow point rally after the news came out. What did it suggest? It suggested, as of Tuesday, when the market was at 28,400, okay, on Tuesday's close, and I think on Thursday's close, the market was at 24,200. So that's, a slight difference in value that equated to approximately 22. I'm going to write it out for you so you understand the magnitude of this. In less than 48 hours, the market went down from Tuesday's close to Thursday's close, $22,000 for one futures contract, one E-mini S&P. At the time, the margin was $6,800. Let me ask you something. Who in their right mind can afford, even if you had a $20,000 account, if you had 2 contracts, just 2, you're well within your margin, but by the time everything was said and done, you lost on those 2 contracts on a $20,000 account, $44,000, which means you're writing a check. If one contract on a $20,000 account, if you had 2 contracts, you lost $44,000. You're not in the business anymore. So the question is, how does this help me to understand the market from a contrarian consensus? The small speculators were the only ones. Look at the hedge funds. They were neutral. Now, the last time we had speculators and hedge funds long against the commercials, it took a little bit of time, and then we got a massive decline. But this time was a little different. The small speculators had amassed one of the largest net long. I'm not drawing this very well. I apologize. Look how many times they're long before a market sells off. Long before it sells off. Long before it sells off. Sells off. It almost seems like this group are just I don't know what the word is, how I can express it. They don't learn, maybe. They bet with their heads and their hearts and not with their heads. I don't know. But this was a little bit different because it was that the hedge funds were actually net neutral. And so from a contrarian standpoint, I can tell you right now, nobody, and I owned a brokerage firm. Remember this, everyone. Nobody would be able to afford that kind of a loss on a one lot. They got to write checks now, and they got to tell their wives they got blown up. And it ain't a pretty story. And it takes time for everyone to write that check, because all of a sudden they can't find their checkbook when they owe you money. Trust me on this. And, you know, amazing how many times you could get a hold of a client until they run a debit, and then you get their voicemail. Anyway, I'm just saying, not to be, I've been there, I've done that, and I know the inner workings of the market. The Commitment of Traders report was setting us up for a fall. What I want to see is, I don't think this Friday at 3:30, if these boys are still long, it would tell me there's more pain ahead. If it shows me that these boys are out and the hedge funds went in and the commercials are lightening up on their shorts, then that would tell me that the market is then probably overdone on the downside and ready for a spike to the upside. That's how I use this as a contrarian indicator over time. All right. So, John, I liked your question, and it is a part of our PUG, because we do use this information, and I've written about it in every single one of my books. I talk about it, and actually I gave that out into the live trading room on Friday. If you don't believe me, come to the live trading room. I think the post is still sitting there in the admin section. So thank you very much for your participation, John. Really, I mean that. Thank you. All right. As we start to scale in over the next few weeks for longer term holdings in our portfolios, do we use trailing stops or buy on the dip? Well, if it's a stock, you've just answered your own question. If it's a stock and it's a longer term holding, if the market does turn around, I guess you could use a trailing stop, but you're getting up trailing stops and value for dividends. So a trailing stop is always good for any stock that I buy, except for when I'm looking at a dividend and a longer term holding. And I might give that maybe about a 20% is generally my start. And at this level, let's take a look at a couple names that I gave out in our emails, and we could start from there, and I'll give you an idea of what I would suggest. Let's take Walgreen Boots Alliance. So at this point, we would start in a scale. And this is a great education piece that ties in with the one of our questions about the volume indicator. So if I may, everyone can kind of see, and I said I like the volume as far as convergence pattern. So the question is the momentum, and to be fair, let's put up the if you want to see the difference in a comparison, let's take a look at on balance volume format analysis technique. Again, this is a weekly chart. Let me turn on balance volume, and let's take a look at the difference. So on balance volume shows a slight degree of the same type of pattern. Prices made a newer low. As you can see, if you drew a trend line against closes, you would note that we have a downside action. The histogram is showing us that we have a much stronger convergence pattern. And if we can turn this thing positive volume, this would give us a very strong upside breakout signal. The PMC is also demonstrating the same type of bullish convergence pattern. The market from the lows that we had over in this area, and let me get over to the screen draw, the right tool. Oh, this changes. Why does it do that from pen to arrow? Why? I don't know. From this arrow area in here to this area in here, we've made a lower low. It could be a little Arthur Merrill M11 bottom. Volume here is not, I wouldn't say it's bad. The volume area here looks a lot more pronounced. The relative strength is significantly stronger right now, and we're in a convergence pattern. The momentum of the price action of my histogram is also, as we've made new recent lows, we haven't seen a new high. The question at hand is not about deciding which stock to buy, but how we use long-term analysis in picking a stock, getting into a long-term holding, and then how do we use a trailing stop function? That's the question at hand. So the answer would be simply this. When we look to add to a position, and currently I'm in the mode of buying certain stocks that are showing signs of promise. The first one that I would say is showing signs of exceptional promise, both on a daily and weekly basis, is again Walgreen Boots Alliance. And this is the PMC indicator. The price of the stock has gone down. The relative strength was outrageously improving. Fuchsia good, red bad, blue awesome. Volume indicator of OBV did not really demonstrate as strong of a potential move, but if we take a look together here, 1 second. We can see another little nuance in the marketplace. The volume pattern relative to the OBV is also shown a bullish convergence. So on balance, volume has gone down, our volume indicator up. This tells me to start selectively buying this stock. I'm going to start buying some, I'm going to add to some, and over time, as it starts to bottom out, as all the indicators start to improve, I'm going to add to the trade. Now, if we start to develop and as we get into a trend, then I would say yes, over time. This is a long-term holding, 16 to 24 months. This is for folks that are looking for a longer-term trade. It pays a dividend. We know that interest rates are going to not go up for the next at least 2 years. So a stock that has good low value right now, that has need and will have a probably, in my estimation, with Walgreens, between pharmacy, everything it does, and again, its purchase of Boots pharmacies in the UK, I think has a little bit of longevity. So again, if we get into a situation where there's a long-term price appreciation where I get to hold the stock and earn a dividend, which is getting paid on my money, this is not the same as a short-term day trade. So trailing a stop, I will be more watchful of using the longer-term green, which would be pivot supports. And as we break out and develop a longer-term trend, be aware of what my dividend is and my entry price. And as it moves up, I will be putting a stop, trailing stop, probably below monthly and quarterly pivot supports. That's how I would play that in that regards for a longer term holding. All right. And how good, if we do get into a trend, are longer term quarterly pivots for any stock that goes into a sideways or trading range market. So if I'm looking at a particular reversal, and I'm not saying that this is the trend we're going to go into, but I want to use the last conditional change on the monthly bars and my quarterly pivots and put my stops under that for a long-term holding. So there's the answer, and I hope I addressed that 100%. Okay? Remember, it's a long-term holding. I'm not using 60-minute charts on a long-term holding. John, define long-term holding. I think 16 to 24 months is 1.5 to 2 years in this business. 2 years is long-term. You look at monthly charts, because remember, for the risk that you're getting into that stock, your reward is a dividend, not just the price appreciation. You're getting a dividend, and that dividend is giving me interest on the money that I would not be earning anyway sitting in a bank. All right? That Jay, I like your question. You made me tell more information than I was really prepared that I wanted to. Don M wants What is this? No, 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 no. I would like information on your asset managed accounts. Okay, well, that's not a question for today, but thank you very much. Regarding question, Mary printed all these out. I'm reading them one at a time. Let's see. Regarding question for upcoming pay, I'd like to get a quick review of LCC exit, dynamic exit. That's more of the Jimmy H. Oh, Jimmy H. God bless you, brother. You know, where were you in the live trading room today? I gave out the St. Francis prayer. Yesterday, we did one on acceptance, which I think was apropos for the market event. Anyway, let's take a look of, he's referring to the last conditional change exit on the dynamic exit versus compression exit, which is in regards to our algo optimizer. Kind of a good question for an algo optimizer, but and a lesson, and then HCD, LCD, momentum, including optimization. Jimmy, if you can come in the live trading room, I'd rather go over that because that's more of an active trading thing. And I'm sorry I didn't get to your question a little sooner, but LCC, many of you are all familiar with LCC and last conditional change, but like since I've already got this chart up and it's staring me in the face, last conditional change is what we've colored, our color coordination here is white, which means that a bar that closes greater than a prior bar's high, the low becomes support. And many times the last conditional change, the market like a magnet will hold that like a rock and take off again. On the other side of the coin, I look for a great combination would be a buy signal once it breaks out above last conditional change. And then the dynamic stop and a last conditional change stop is a lot different. The difference, Jimmy, is that last conditional change is only last conditional change. Dynamic is a combination which would show you a difference of the difference between the two in a mathematical formula. So it's not going to be the exact last LCC. So it may help if you use the dynamics. You'll find out, especially in short-term trading, or shorter term trading, shall I say, that more times than not, the dynamic is a lot better for protecting on trailing stops. So as you see here, if the dynamic stop would have been more than likely the midpoint of those two numbers, it would not have stopped out here. As you can see, if you used a last conditional change, if you were long, you would have been stopped out and the market just went back up, dropped out, and went back up. So the dynamic is more geared for an average of the last conditional change on a trailing stop function. Compression just means that it kind of uses a dynamic feature, but it won't turn on until you get further away from your entry price by X amount of average true range. So in this example with all these squigglies, the compression exit would take in effect, if this was your entry, and this was your stop, and you would need the market, if the ATR here was, say, 3 points, $3, and if you had an ATR of 4, that means the compression exit's not going to turn on until the market moved $12. So if your entry is 42, it ain't going to start until you get up to 54. So the compression has to be adjusted and optimized for the market itself. One setting does not fit for all markets, just remember. But that's the difference between the LCC, the dynamic, and the compression. The compression only turns on after it hits so many ATRs to start. A B, there's a timing element that the compression takes over. That was the functions that we put in to the algo optimizer. Extremely sophisticated and modernized for this day and age in this world. Jimmy, thank you for a question. I'm glad you're back, man, and I hope you're finding success with the algo optimizer as others are. Let's see. That it's now 5:14. If someone had a dire burning desire, question to ask, would we be able to answer a question? Let's see. Jimmy Hagman, thank you very much. I wasn't supposed to say your last name, but God bless you, brother. Glad you're here. Hardy says, in terms of long-term holdings, what are your thoughts on selling puts to get in and selling calls? So what are my thoughts? I need a situation. And in this environment, selling puts outright is a great. This is the best environment for selling put options. I hope we're still here. This is the greatest environment for selling put options. You need the cash if you get put the stock to you. And if the market has a big slingshot, remember, unfortunately, selling a put does not give you the right to own the stock, only that you're collecting premium. So if you want to buy stock for the dividend going forward, selling puts is not going to do it for you. If this market has any kind of a slingshot to the upside today in this high IV market, probably this is the time to start to establish positions, not to put on collar protection or covered calls right now, not this second. Because the market, a lot of the stocks are so damn cheap. If we do get a springboard up, you're going to see, like today, a stock like AEP up 10%. Where do you sell a covered call against it, right? So I need a little bit more specific. Not all one strategy suits every market and every condition. And I hope you understand that. Not all strategies work for every single stock in every environment. It's not a cookie cutter market, by the way. Don't let anyone fool you that it is. You have to look at the dynamics, the execution, see if there's any skew on the options with the vol, as well as the bid and the ask, if there's demand. Otherwise, it's a lot easier in theory than putting it into reality. I thank you that we went over 16 minutes. It was a 30-minute presentation. We had a lot of great questions. I wanted to get through all of them, and I missed two, but I think these two can be covered in the live trading room anyway, because one's asking about the British pound and my settings for the British pound. So that would be a trade room. Thank you, though. I don't want to skip. I saw the question, George V., and I want you to be careful down there in Miami, and don't get near people sneezing. Just saying, not judging. Thank you all very much for attending today. I hope I gave you better insights, tools that you can use, what the purpose of and practicality of using the PMC against the overall market, and the patterns in which we use it to help us make better trade decisions. Thank you all very much, which, by the way, I think the last one, which we did, not that every trade's a winner around here by any stretch of the imagination, but if I may be so bold, I share this and then we'll run and let you guys and ladies and gentlemen, get over to any type of family event that you have with St. Patrick's Day. Real men would drink, in the old days, as I was told, a real man drinks Guinness Stout. It's like, man, I'm sorry, man, that's just horrible. But you can mix it with Harp beer, and it's called a half and half. Just to give you a little knowledge there. Guinness with Harp, half and half. All right, next. WMT. People are spending money like no tomorrow, friends, believe it or not. You might not think there's consumer spending going on. People are buying products, grocery stores, groceries like there's no tomorrow. They're putting it on their credit card. So there is commerce going on. It's just not going in the terms of furniture. And you know what? I said this in the live trading room. This is an open mic. It's being recorded. The Palm Beach Mercedes dealer called and said, because I was looking for a different car, and they said they're busier than ever. People are coming in because they have nothing to do. And I don't know if he was just blowing smoke, where, but he's saying that men were buying cars for their wives and going out like it's date night. It's like, wow, they must be in more put options than ever, because if you're buying a Mercedes for your wife, boy, that's a good trading day, right? Anyway, the car dealer was busy, the Mercedes. Now, that's in Palm Beach. It's one area. I don't know if the guy was telling the truth, but it's interesting to hear that kind of thing. People down here in Florida, they're driving in droves. Why? Schools are out for another month. What are you going to do with your kids? You got parents that have a home down in Florida. Boom, everyone's down in Florida. I'm wondering if this state sinks in the ocean. There's so many people coming down here. Anyway, we are in the midst of a backup in progress, and I apologize for that. I was going to show you Walmart, and right now it doesn't look like we're going to get there fast enough. So anyway, Walmart had a great setup for us. Walmart with the relative strength PMC and the volume tool, and it's right up our alley of the questions that we had. So with that said, I hope I was able to answer a lot of your questions, and I hope you had a good time. I hope I gave some insights. With that, I'll see everyone in the live trading room tomorrow. Thanks for joining me today. Bye-bye.